Hello friends, welcome to Matt. This is Murali's Accounts Time. Accounting for joint stock company, issue of share capital. In this we are going to learn about issued at premium and calls in arrears. In the previous video I was explained about premium. In this video I included calls in arrears. Let's see what is calls in arrears. After allotment of share, if company not received any installment from the shareholder is called calls in arrears. A company used to receive the entire capital in installments. Usually first they need to apply for the share. After applications the company used to allot the share. So after application, once the company allotted the share, after allotment, if the shareholder not paid any installments, that particular term called as calls in arrears. Let's see the practical question. Issue of share at premium and calls in arrears. Tata Motors Company Limited issued 25,000 equity shares of rupees 10 each at a premium of 2 per share. The amount is payable as follows: rupees 2 on application, rupees 5 on allotment, that is an including premium, rupees 5 on first and final call. All the shares were subscribed and the money duly received except first and final call on 700 shares. Pass the journal entries. First we'll analyze the question. The company issued 25,000 equity shares. The company going to collect 10 each, also premium 2 per share. So total 10 plus 2, 12 rupees company going to collect per share. Now company will collect in 3 installments. A first installment called as application. So out of 12, a company going to collect 2 rupees at the time of application and 5 rupees at the time of allotment. But this 5 rupees is an including premium. Already we know 2 rupees is an premium. So what we should do in this 5, we need to minus 2 rupees. The balance 3 rupees is an capital. Rupees 5 on first and final call. All the shares were subscribed and the money duly received. But what happened here? Except first and final call on 700 shares. The shareholder applied for 25,000 shares totally. They paid first installment fully and even they paid second installment fully. So but what happened at the time of last installment? Only 700 shares the company couldn't receive the money. So this particular term only called as calls in arrears. Now let's see the working note. Equity share capital 25,000 into 10, 2,50,000, and securities premium 25,000 shares into 2 each, 50,000. Company going to collect total 3 lakh from the shareholder, capital 2,50,000 and premium 50,000. Now this 3 lakh rupees company going to collect in 3 installments. Those who want to invest in a company as a share, they need to apply first through the application. So company collecting at the time of application 25,000 shares into 2 rupees 50,000, and in the second installment company going to collect 25,000 shares into 5 each, 1,25,000. This 1,25,000 is an including premium. So now what we should do, we need to separate the premium and we need to separate the capital. So equity share capital 25,000 shares into 3 each, 75,000. Securities premium 25,000 shares into 2 each, 50,000. So this 1,25,000 we need to divide as capital as well as premium. Now company going to collect as a last installment first and final call. So equity share first and final call 25,000 shares into 5 each, 1,25,000. But in this problem we have a calls in arrears. As we know in the question, 700 shares company couldn't receive as a last installment first and final call. So that's called as calls in arrears. So we should minus the calls in arrears. Less calls in arrears, 700 shares into 5, 3,500 rupees company couldn't receive. So company received from the shareholder only 1,21,500 rupees. So the changes will come at the time of arrears. So we need to deduct whatever the company not received and the balance only we need to record. Now we will see how to record the transactions in the journal. So first we should write the heading journal entries in the books of Tata Motors Company Limited, and we should make the format of date, particulars, LF, debit and credit. Now we need to record the transaction. As we know, a company will receive entire capital as well as premium in 3 installment. A company receiving first installment through the bank. Usually company will not accept direct cash from the shareholder, so company will receive the entire installments through the company's bank account. Now company's bank account increasing, so we need to debit the bank 50,000 and we need to credit equity share application 50,000. Here we debited the bank because according to American approach, when bank balance increase we need to debit it. We are applying here actually asset rule, so bank is an asset according to American approach, that's why we debited, and we credited equity share application 50,000. We should share application money received for 25,000 equity shares of ₹2 each. After collecting first installment through the bank, now a company will transfer the application money to capital. So we should record to equity share application account debit 50,000 to equity share capital account 50,000. Now the application money transferred to equity share capital account. Here equity share capital credited because when capital increased in business we need to credit according to American approach. So being equity share application money transferred to equity share capital account. So company received application money through bank, and after receiving the application money transferred to equity share capital account. After transfer, a company will send a intimation to the shareholder to pay the second installment. So before receiving second installment, company will transfer the allotment money to equity share capital as well as premium. So we need to record as equity share allotment account debit 1,25,000, and this 1,25,000 it is an including premium. So now what we should do, we need to separate the premium and we need to separate the capital. So now to equity share capital account 75,000 and to securities premium account 50,000. So this entire 1,25,000 we divided 75,000 for capital and 50,000 for securities premium. And as you see here, security premium credited. Securities premium is an income for the business because the company collecting extra amount from the shareholder, it is an income. According to American approach, when income increasing in business we need to credit it. So we should debit equity share allotment account 1,25,000 and we need to credit the equity share capital 75,000 and we need to credit securities premium 50,000, and we should write the narration being equity share allotment due for 25,000 equity shares of ₹5 each including premium 2 each. After transferring allotment money to capital and premium, now company will receive the allotment money from the shareholder. So they need to deposit again into the company's bank account. So bank debited 1,25,000 and to equity share allotment credited 1,25,000. As you note, in the first installment the bank received money first and the company transferred to capital account. But second installment, what company did, company transferred allotment money to capital and premium, then the company received. The reason is, in the first installment company don't know who is the shareholder, that's why company collected money first and transferred. After receiving application, now company know very well who is the shareholder. Now what company used to do, company will transfer second installment to capital and premium as a allotment, then the company will receive. Usually after first installment the company used to transfer money to capital, then only company will receive. Now let's see the third installment. So equity share first and final call account debit 1,25,000 to equity share capital account 1,25,000. Now company transferred first and final call to equity share capital as a due. See, being equity share first and final call money due for 25,000 equity shares of ₹5 each. It is a due. This due company going to receive, but total due is 1,25,000. Let's see company how much received. So we need to debit the bank account debit 1,21,500 to equity share first and final call 1,21,500. Actually, total due is in 1,25,000, but the company received 1,21,500. The reason already we know, it is in calls in arrears. Total number of shares issued by the company 25,000 equity shares. In that last installment, a shareholder couldn't pay for 700 shares. So the company received only 24,300 shares into 5 rupees. A company received only 1,21,500 rupees. So this is the changes we need to make at the time of calls in arrears. We should write the narration being equity share, first and final call money received for 24,300 equity shares of rupees 5 each. So whenever calls in arrears at the time of collecting money, so we need to minus whichever not received and we need to calculate on the balance shares. Hope you understood this particular concept. If you like this video, please subscribe my channel. Thank you.